Who benefits from private investments and your 401k? I will tell you, it's not you. I keep seeing more and more of a push to allow private investments in credit, equity, and real estate into your 401k. Let me give you a list of who the big benefactors are if private investments are allowed in your 401k. And yes, it is the big fat cats on Wall Street. There are 6 main players: Apollo Global, KKR, Carlyle Group, Blackstone, Ares, and Blue Owl Capital. These companies rake in high fees, with Morningstar estimating them around 2.5% on average. I was disappointed on August 7th when President Trump signed an executive order that instructed the Department of Labor and the Securities and Exchange Commission to make it easier for company plans to offer private assets. A spokesperson for the White House, Taylor Rogers, said the intent of the order is to reduce the regulatory burdens and litigation risks that impede American workers from achieving a competitive return. Now, considering the return for equities over the last several decades, I believe nothing could be further from the truth when looking at that statement. On August 12th, the Department of Labor rescinded a Biden-era statement that said most companies are not likely suitable to evaluate the use of private equity investments. It's a shame that has been reversed because most of the business owners that I know don't have the time to analyze investments enough to make decisions to allow them in the 401k. And ultimately, employers have a fiduciary responsibility to employees to make sure the retirement is safe, and I worry if employers get too loose in allowing these 401k plans, they could open themselves up to lawsuits down the road. There is hope, as there's an advocacy group called Americans for Financial Reform that says without strong guardrails, well, ordinary savers will pay the price of diminished resources in retirement, will more than likely be left holding the bag with these expensive private investments. I do hope the Department of Labor is opposed to making a quick issue on guidance, and hopefully they will take their time in drafting formal rules. This could take months, and after that, it could take employers years to do the due diligence on these investments. And hopefully, by that time, people will come to their senses as we may see another liquidity crunch like the Blackstone breach had in 2022 and 2023, or even potentially a collapse in some of the popular private investment funds. I'm Brent Wilsey with Wilsey Asset Management. If you like these videos, be sure to give a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.